Good evening to all of you, and welcome to another round of weekly market update by SC Securities Limited. So, as usual, I will be taking you through the first few parts, and Harin will take over from there onwards. So, quickly moving to this week's market update. For this week, it was a kind of an impressive one for Colombo Stock Exchange, all-time highs for 4 consecutive days. And if it comes to market performance on Monday, it closed at a magical 10,046.80 and reached an intraday high of 10,080. Even if it managed to come closer to this 10,000 level at last Friday, that means on 22nd, it didn't sustain to remain at that point. So on Monday, it break the point and reached to a level of 10,046.80 with gaining points of 131.58. Whereas S&P SL20 was also witnessed an up from 39.01 points to reach 3,644.73. So this when it comes to the expected quarter earnings, is the major reason for this improved buying sentiment from the investor side. And when it comes to turnover, it was recorded to be a higher amount compared to the values that was recorded in last few weeks, and a worth of 6.8 million turnover was recorded for the day, the first day of the trading week. And short time span was taken to pass 10,000 points. Wherever we see the 9,000 level was passed in September, and 8,000 in SPI was passed in July. So in order to reach the SPI to 10,000 points, it was taken a little span of time. So on Tuesday, if the momentum continued and SPI reached to a new record high of 10,128.04, gaining over 80.24 points, and so does the S&P SL up by 15 points. And on Tuesday, we observed high net worth institutional participation in several counters like Renuka Hotels and RICH, Rich. On the Tuesday as well, turnover recorded to be a higher one. It showcased somehow a slight decline from the value recorded in Monday, but if it is like that, it was recorded to be a somewhat a higher value than the monthly average. And on Wednesday, turnover was comparatively low. It declined back to a level of 5 million, but anyhow, was continued to go uphill and recorded a fresh all-time high of 10,146.90. On Thursday, we saw a slight decline in SPI coupled with S&P SL20, majorly due to the fact that month-end profit taking by investors and some sort of surrounding rumors on Keravalapitiya power plant recent agreement with the US, and the trade unions get triggered and they are going for a sort of a power cut, a sort of a trade action. So back on that information, ASPI, the burst was slightly declined, but it gained the positive territory on Friday, back recording a fresh all-time high, recording a new all-time high of 10,162.93, was up by 25 points. But when it comes to turnover, even though it increased compared to the turnover recorded on Thursday, it was slightly average. The monthly average was amounting only 4.9 million, which was comparatively lower than the turnover that was recorded in the very beginning of the week, 6.8 million. When it comes to foreign purchases and sales, for the entire week, we observed the foreigners tend to exit, and the foreign buying was recorded to be lower amounts. And on Friday, it came to a peak level of 432 million on Friday, where the foreign buying was exhibited only like 29 million. So the index can be expected to consolidate in between 10,000 and current all-time high, witnessing the turnover declining. So better to be careful. That's what you should do. And quickly moving to economic update. this week we see that the Moody's Investor Services has concluded their downgrade review uh, on our country's uh, debt and long-term currency issuer, where it was downgraded from CAA1 to CAA2, which was initially reviewed at a day on July 19. So this was majorly due to the fact that the Moody's expect that government will experience a lack of comprehensive financing to meet its upcoming maturities, and that will lead to possible default risk with having lower foreign exchange reserves. And also they mentioned that countries heavily running through on the back of several borrowings, like the collateral debts and also swap deals with foreign countries, and we see a very less amount of non-debt related revenue coming to the country. So with all of these reasons, they have concluded their downgrade revenue on the country. But anyhow, on country, the government of Sri Lanka has expressed their concern over this decision made by Moody's, and they claim that this is kind of disappointing because Moody's does not have a slight idea on what government is going to do with the upcoming budget, and they have a lack of information about the financing sources what the government of Sri Lanka is going to take into account. So that was announced at a press release made by CBSL yesterday. And Sri Lanka earned remarkable export earnings for the month ended September, which was worth of $995.8 million. But it shows a slight decline compared to the values made in July and August, because for those months it surpassed the level of 1 billion. So for this time, the September ended month, it showcased a slight decline. But anyhow, it should be appreciated that these export revenues are generating through a pandemic, so it should be anyhow appreciated. And we see majority of the contribution to the export earnings was made by apparel and textile industry, which was accounted to 457.05 million, and the rubber segment also managed to bring 96.09 million to export earnings. And out of the categories that contributed to the export earning for September 2021, it was apparel and textile, tea, rubber-based products, and also electronics. So for the quarter ended, it showcased an upward movement of 5%, reaching to a level of 82.83 dollar billion on year basis. And altogether, when it compares with the corresponding periods, the merchandise exports reached up to a level of $8,881.93. So quickly moving to the spot rates, SL rupee was declined and depreciated against these four currencies: USD, GBP, UR, and GPY for this week as well, where those foreign currencies resulted appreciation by themselves. And when it comes to the Treasury bill auction that held last Wednesday, yields continue to rise, where the 3-month yields rise from 8.39 to 8.43, and no bids were accepted under 6-month Treasury bill, where only a less amount was accepted under 12-month Treasury bills. So a 12-month Treasury bill rose to a level of 8.18 from the previously recorded amount of 8.17. Out of the total amount that the government wished to get, that was 56.5 billion, and out of that 56.4 million, a major composition was done by 3-month Treasury bills. And when it comes to commodity prices, this time oil prices, copper and aluminium declined, whereas the gold observed a slight upward momentum. And when it comes to oil prices declining this week, it was majorly due to the stockpiles rose in the largest storage in Oklahoma, and they get trouble delivering the demand because of the emptying storage. So that was the major reason for the declining observed in oil prices. But gold prices witnessed a slight increase on Friday, as I mentioned you previously. Majority of the investors are seeking gold as an inflation hedge. So the based on the weighing upon the stronger US dollars and also the inflation expectations on themselves make it more valuable for gold prices compared to other materials. So that's why investors are more after gold. And aluminium prices for the peak witnessed a decline on the back of China is going to ease their prices on coal. They have recently experiencing a crisis in gold and gas. So when the China announced that they have a space or room to reduce their prices on coal, that means the raw material cost for the production of aluminium will automatically get declined. So on that reason, aluminium witnessed a decline for this week. And when it comes to global markets, Amazon and Apple earnings were relatively lower than the investor expectations. On the back of that information, global markets declined. Majority of the global markets declined on Friday. That was majorly due to the fact that the Amazon and Apple earnings were heavily hampered from the fact that the supply disruptions that are existing and the higher wage rates that they have to pay for their employees. So because of that reason, the higher cost they have experienced like declines in their profits, and on the back of that, the global market saw on Friday. But Chinese blue chip companies continues to gain, but on the other hand, Chinese real estate companies lost on the fact that even though the Evergrande managed to pay its second consecutive interest payment this Friday, the real estate sector bodies are continuing, and that's what the reason for the decline in the real estate index. So Japanese Nikkei rose due to the investor optimism over corporate earnings, but still they are weighing on the fact that the forthcoming general election that is to be held in Japan. Uh, so the Japanese companies, majority of the Japanese companies performed very well. They earned good earnings, positive earnings, despite the fact that some negative outcomes were resulted from supply chain disruption. So that was the major reason for the pickups that we can observe in Japanese market this time. And technology stocks dragged European markets on Friday. And on the other hand, the Eurozone inflation hits a record high of 13 in September. That was majorly due to the prevailing energy crunch. And the European Central Bank's pandemic stimulus package was expected to come into action in December. So the Eurozone investors are much worrying about this inflation hike, the stagflation continued in the Eurozone, and that can have some sort of negative impacts on global markets worldwide. So from here onwards, Harin will continue the presentation. Harin, over to you.
Thank you, Sachini. So let's look at our commodity counter for the week, which is copper. So looking at copper, the price is actually trading at $4.35, and we were able to see some sort of a hike in copper price and hitting the resistance level of 4.8, 4.85, the previous resistance zone that we were able to see in somewhat around in May. So again, in May, we were able, when the price reached that level, and we were able to see some sort of rejection from that area. And again, in the month of October, we were able to see the price getting rejected. So the continuous rejection of copper price has actually made it decline to the daily support level 4.4, 4.45. And as the market is trading at the moment, this support level will become official resistance zone once the daily candle closes. And from next week, we'll be able to see the price trading below somewhat around the daily resistance of 4.4, 4.45. So if the price continues to reject and there's some sort of a crossing that's going to happen in the 18 and 8 moving averages, so therefore if the crossing occurs, we'll be able to see a downturn in the copper price. So there, whereas we were able to see previously how copper price was actually consolidating over a period of time, so this consolidation would actually happen again if the price trades again below the 4.4, 4.45. So there's actually a higher possibility that the price could decline further, as there is some sort of bearish momentum, and also the price is trading below the moving averages, and also there seems to be some sort of a crossing that's going to happen in the 18 and 8 moving averages. So once the price declines from the 4.4, 4.45 zone and we'll be able to see some of the consolidation between the area 4 and 4.45. So the area of consolidation would be the key area over here. So RSI, we were able to see previously somewhat around in 14 to 19 October, we were able to see the RSI was getting near to the overbought region. But once again, reaching that key area of the overbought region, we were able to see the declining happening, and there was rejections over and over again from the resistance level of 4.8, 4.85. So basically the continuous rejection from here onwards, we'll be able to see the price declining to the area 4.05 as the price trades below the resistance level of 4.4, 4.45. So looking at our all share index, looking at the daily chart, what we can see is the RSI is actually quite overbought, and it is at 78.23. And it has been becoming like overbought for a period of time now. For a period of week, it has been in the overbought region. So it we previously we were able to see how that 9,450, 9,500 area was broken out, and it initially became a support zone. And once again, the market hitting, going towards the level of resistance 9,950, 10,000, and breaking that barrier of 9,950, 10,000. And now we can see some sort of a rejection over here, which is on 28th, we were able to see the index made a high of 10,204.09, and there was some sort of a doji candle appearing there. So in top of that, top of that, what we can see is if the index actually gets rejected over and over again from the current all-time high, it could actually consolidate in between the daily support level of 9,950 and also the all-time high, which is 10,204. So if there's enough bullish momentum and enough turnovers to push the market up, we'll definitely see it going towards the next daily resistance 10,450, 10,500, as the moving averages also indicates a very strong bullish momentum. But however, RSI seems to be quite overbought, that this could lead the index to consolidate for a period of time, or if there's enough turnover turnover in the market, this or previous all-time high of 10,204.09 could break, and further the market could actually regain and reach the level of daily resistance 10,450, 10,500. So looking at our pick of the week, which is lubricant. So this is basically the monthly chart that I have taken. So monthly chart, the RSI comes to a level of 62.08. And also there was a couple of rejections happening over the monthly resistance previously in the month of January and also in the month of July. So this resistance still I haven't taken it as an official support zone, since the month for this month the price needs to basically starts closing above the monthly resistance 110, 113. And also next month onwards it needs to make a small minor retest to make it the official monthly support zone, and thereafter we'll be able to see the price moving towards the weekly resistance 124, 125. So so monthly chart basically clearly we can see how the price was actually declining over the last couple of years, and then once again in the last couple of months we were able to see how the bullish momentum came, and this 110 113 was retested, and then from thereafter there we were able to see some sort of rejection, and the price came to make a low of 86.6, and then price bounced back to the monthly resistance 110 113, and the last traded price is 114. So hopefully if the price manages to close above 113 from this current monthly resistance level 110 113, so we'll be able to see the next month the price could actually become more bullish, and also reaching the weekly resistance 120 425 at the moment. So we can clearly see there was higher high formation, higher low formation. So next the higher high formation could be somewhat around in the area of 124 125. So that could be expected soon as the price closes above 113 for the month, and then next month if the price actually sustain about that key area of 113 without a false breakout, because we were able to see in the month of August there was a high of 121, and price came below the monthly resistance 110 113 on the same month after making high of 121. So if scenarios like this doesn't happen, then we will be able to see the price becoming more bullish and then heading towards the 124 125 key area without basically a false breakout on this key area of 110 113, because multiple times there even previously when we look at there was some sort of false breakouts, and even in the August month we were able to see how the price actually tried to break that key level of 110 113 and close above that level, but it failed. So even even in the current month as of now we can clearly see even the prices are trading above 113. If it doesn't come below that key level, then it's good, we'll be able to see my price moving towards the weekly resistance 124 125. So anyways, the previous crossing was somewhat around in 2017, which was a bearish crossing. So now we have entered a bullish crossing for the long run, which happened in around somewhat around 2020 December and 2021 January. So we were able to see that crossing happening. So this typically means that the price could actually slowly move up towards following the trend and making higher highs, higher lows, and testing the moving averages. So thank you. Over to you, Sachini.
Thank you, Harin. So this will be the end of our today's presentation, and hope you all get a good understanding about this week's market happening. And we'll see you all around next week. And until such time, have a pleasant weekend. Thank you.